What's going on, everybody? In this video, I'm going to go over Workhorse's earnings, and we're also going to touch on CPI really quick. CPI did come in under expectations, and it is causing small caps to rally a bit, except for Workhorse, who just reported earnings. And I believe we have a bit of a mixed bag there. But let's get this started. We're going to look at CPI, and then let's get right into Workhorse's earnings. Alright, and I already recorded this and went through the whole thing, and found out that my audio was echoing. So let's do this again. Now you can see that from our peak inflation, we were coming down, we started bouncing back up. Inflation started coming back in higher and higher. And it seems like our recent CPI print bucked that trend. We had a 3.2%, whereas we're expected to see a 3.4. I do think this downward trend will continue. And of course, we'll have some months that come in higher than previous months along the way. But in general, I do expect inflation to keep coming down with these record high interest rates. But the market is reacting positively to this CPI print. And I want to mention to you guys to look out for PPI coming out tomorrow. This is going to be November 15th. This is going to be another catalyst that can move the market in either direction depending on the data. And here's Workhorse's third quarter results. I will leave this down below for you so you can access this press release as well as their earnings call. And after I edit and get this video out, I will be listening to it, probably give you guys an update on Discord, and it might cut up their earnings call and give you guys some of the key points. They always have some valuable hidden bits of information in the Q&A, so you definitely want to listen to their earnings call. And we have some comments from the CEO. Now I skipped over the top portion. We basically get some repeated information that I will go over here in a minute. But the CEO says, while we made tremendous progress in the areas within our control, our ability to deliver W4CCs and W750s during the quarter was severely impacted by the lack of HVIP voucher availability in California. As of today, I'm pleased to report that we have successfully resolved this issue and are moving swiftly ahead. On November 8, we received approval to participate in a first-of-its-kind program that the CARB, or California Air Resources Board, has now put in place for HVIP certification in California, and Workhorse is the first company to receive this approval. We sincerely appreciate the problem-solving efforts of CARB, and while this delay impacted our financial results for the third quarter and our outlook for the remainder of the year, we're now in a position to execute free of constraints. We feel strongly that we have the right products targeting the right market segments as we help drive the transition to EV-powered commercial work trucks in California and other states adopting the CARB clean fleet mandates in 2024 and beyond. And they give us an update on their product roadmap. We will touch on the HVIP voucher process in a second here. Now the W56. During the third quarter, Workhorse began production of both the strip chassis and step van models after successfully completing all FMVSS, or Federal Motor Vehicle Safety Standards, durability and validation testing. Workhorse has initial production demonstration units in the field in California with multiple customers, with initial feedback being extremely positive on performance in real-world last-mile routes. The company anticipates final HVIP certification of the W56 to be completed in Q4 of 2023. And I'm here on that California HVIP site, and you can see down at the bottom, we do currently have the W750 on here. And next up is the W56. And you can see for this vehicle, the incentive is $60,000 for a company to purchase this vehicle. Now, as for the W750 and W4CC, the company reached production of 4 W750s per week, shipped demonstration vehicles to potential customers, and completed demonstration tests with city government agencies in California and 2 30-day delivery routes for a major office supply company on the East Coast. Given current inventory levels, the company temporarily paused further production of the W4CC pending resolution of the HVIP voucher matter in California. Workhorse also successfully added 2 new certified dealers to their network of commercial dealers. They also received their IRS approval as a qualified manufacturer for the commercial clean vehicle tax credit. This is a $40,000 credit, and it's per vehicle for deliveries of all Workhorse vehicles in 2023 and beyond. They also completed their in-house paint system at their Workhorse Ranch, and they're making progress with their Stables Installs initiative. Workhorse now has 7 Class 4 EV units in the delivery fleet and plans to add W56 to the fleet in Q4 of 2023, so before the end of the year. Now they also talk about their aero business, and this is where things get a little weird. They began drone assembly in the Mason, Ohio facility. The company sold and delivered 3 additional drones. They received 2 additional grants expanding work for the USDA, and these grants total approximately $1.1 million. And they also entered the FAA 44807 exemption process, and they plan to have the Horsefly approved for FAA Part 135 by the end of 2023. Now, on what I was saying is a little weird. The company is evaluating a broad range of strategic alternatives for its aero business, which may include the sale of the business, strategic partnership, another transaction, or the continued execution of the company's strategic plan for aero within Workhorse. The company has not set a timetable for completion of the process, and does not intend to comment further until the process is complete. Seems to me that they're thinking of their money situation, thinking of ways that they could cut expenses, thinking of ways that they can shore up some extra cash for their vehicle side of things. I think this is their main focus, and the drone is just a little bonus, potential way for them to make some money from an acquisition, and they're still open to hold the business if they aren't acquired by somebody else on the drone side of things. But to me, that's a bit strange. To me, it kind of shows that they're not extremely confident in getting a lot of sales for their drone service, or they're at least not confident in flipping to break even on that portion of the company. Now, third quarter results are a mixed bag, and we have sales recorded at 3 million compared to 1.5 million the last year. So year over year, they saw a 1.5 million increase in sales. However, quarter over quarter, they actually saw a decline in revenue. But in terms of expenses, these are coming down, which is great to see. Year over year, their cost of sales decreased to 6.6 million from 9.5 million. Their SG&A decreased to 11.8 million from 34 million. Their R&D decreased to 5.8 million from 6.1 million. And they did make 0.4 million from their money market investment account. Now, looking at their net loss for the quarter, we're looking at a 30.6 million net loss compared to 35.4 million in the same period last year. An update on their money, they currently have 71.9 million, including 38.9 million in cash. They also decreased their end of year guidance, and they expect their full year revenue to be in the range of 10 to 15 million. And the CFO says our financial results for the third quarter and our outlook for the year were significantly impacted by the HVIP voucher delays. The positive resolution of the HVIP voucher is great news and provides meaningful momentum exiting 2023. However, in light of this market disruption and the delayed timing for access of our products to the California market, we are significantly reducing our revenue outlook for the remainder of 2023. And they also say this is kind of, this to me kind of gives us a clue about the aero business and what they're doing there. Importantly, we're taking major steps to strengthen our financial position and ensure we have the runway to execute our strategic and future product plans. We're in advanced discussions with third parties to obtain additional financing to support our growth plans. We're also evaluating other options to strengthen our liquidity position. Now, they're strengthening their liquidity position using other options. They're either talking about their aero business, or they're talking about dilution, or they're talking about both. I think we're going to see some dilution here. They're either going to pull out debt at a very high interest rate, or they're going to dilute, or they're going to do a combination of both. And they are considering either selling their drone business or doing something else with that. And you might see that as a positive or a negative. Really depends on how you look at it. I think these execs are trying to be aware of, you know, their finances and just making sure that they have enough money to stay afloat. And if that means having to cut out the drone business, it is what it is. I do think the main thing here is their actual delivery vans. Drones currently are quite a saturated market in my opinion. There are a lot of companies vying for commercial drones. Whereas last mile delivery vans, we don't have as saturated of a market. And the chart's looking ugly. We're facing a declining 50 and 200 MA, of which we are under. We're also under the 50, 100, and 200 EMA, and we recently created new lows. That's not good to see. And it also sucks that on a day that a lot of small caps are rallying on a decent CPI print, Workhorse is pulling back due to its recent earnings. I would be very careful buying Workhorse here. The chart just looks bearish. It's still a falling knife. I mean, you could place a bet and say that this is the bottom, but that's what people have done throughout the last couple years, saying that it's bottomed out only to create new lows. All I'm saying is be careful here. But things are starting to look better in terms of the economy, in terms of Fed rate hikes. I do suspect we're going to start seeing Fed cuts in the near future, although we do have to still see inflation data coming down. But that CPI that we just received is a sign that things are going in the right direction. But thanks for watching, guys. Let me know what you think about Workhorse's earnings. To me, it's a bit of a mixed bag. I would have liked to see more revenue growth. It's nice to see their expenses coming down, but I really wanted to see that revenue continue growing. But over the long term, we are going to continue to see year-over-year revenue growth. There may be some lapses along the way where we see a dip quarter over quarter like we saw here. But I still believe that these execs will lead Workhorse to be a successful company. Let me know your thoughts down below, guys. Thanks as always for watching, and I'll catch you later.